Crypto loans are booming though, and that is because of basically bank rates and inflation. The traditional banking system and economic instability are making it difficult for Latin Americans to get credit, but crypto lending is thriving across the region. It is not easy for Latin Americans to borrow money from traditional banks at a time of extremely high interest rates and relentless inflation, so some in the region have turned to crypto to gain access to needed credit. Back in 2020, when the lockdowns induced inflation hit, Latin American central banks were among the first to hike interest rates, with further increases in 2021 and 2022. Back in 2020, so as a result, traditional banks' lending rates grew exponentially, acting as a trigger to the growth of crypto platforms, which offer up to 50% lower rates and zero maintenance fees. Ledn, a Canada-based lending platform with more than 125,000 users, started operating in Latin America in 2019. The region now accounts for 50% of the loans granted by the company, and the co-founder and chief strategy officer Mauricio Di Bartolomeo told CoinDesk. And here's the deal. That's crazy. Look at that kind of adoption in crypto. 50% of the loans in the region are cryptocurrency-based loans. That is absolutely insane and simply insane. But to take this further, to give you guys an idea of how crazy that is this doesn't stop there, right? Because here's what gets nuts. Here's what's nutty, okay? The lending rate right now is an annual interest rate of 7.9%. It's getting to the point to where even in the US, it would be stupid to take out a loan with a bank compared to taking out a loan with a crypto platform like that, just based off the interest rates. So Ledn, or Lend, basically spelled like hodl, offers credits in US dollars and USD coin, stablecoin, with an annual interest rate of 7.9%. When receiving USD or USDC loans, the collateral in Bitcoin must double the loan. The company provided $500 million in loans in Latin America, with an average amount of Bitcoin-backed loan of $9,206, he said. In July, Bunebit, a Latin American crypto exchange, started offering crypto credits in Argentina. And hold on, let me get rid of this real quick. I'm sorry, I usually cut this down and get rid of them, and I did not this time. Where did that go? Hey, asshole, stop messaging me. Quit. All right, there we go. All right, sorry about that. I'll do better and make sure those are closed down next time. So, in July, the Latin American crypto exchange started offering crypto credits in Argentina via NUARS, a stablecoin pegged to the Argentine peso that operates on Binance's blockchain and must be collateralized in the US dollar pegged stablecoin DAI. Since the launch of that lending feature, the amount borrowed for NUARS grew by 70%, Manuel Calderon, Bunebit's financial manager, told CoinDesk. He said the borrowing limit expanded from 1 million Rs, equivalent to $3,703, to 5 million Rs in September, adjusting to user demand. Depending on the amount borrowed, the collateral required can go up to 90%, he said. The annual interest rate is about 69.5%, though it can change on a daily basis as the markets fluctuated, he added. With Argentina's traditional banks, loan rates can exceed 200% annually. Dear Lord. According to data from major institutions surveyed by CoinDesk. This feature is designed for those who do not want to sell US dollars but need to get a hold of pesos for an expense, either short-term or long-term. This way you can keep the dollars and use them as collateral to take out the loan, which obviously in the case of Argentina meant it was a big deal, right? You want to hold that US dollar. We already talked about the importance of stable coins. Basically, helping prevent, regular people in other countries that don't have access to the US dollar without being extremely rich, being able to access the US dollar to basically hedge against the inflation of their own currency. And this is something that the UN has come out against, right? The UN wants to block this because, I mean, if we're being completely honest, part of the way the game works is basically trying to destroy like smaller countries' economics or economies, right? This is something that we've seen a ton of times from, basically the UN, etc. So I don't know how long stable coins will stay in existence without heavy regulation. It's clear that it's gone from just wanting, like, individual countries wanting to basically regulate it to now like a basic, essentially a kind of a globalized ruling entity trying to essentially go in and regulate it. In August, Noom Finance, which developed a stablecoin pegged to the Peruvian sol called Nupin, started offering loans in new Rs and new Pen on its own platform in Argentina and Peru. According to Santiago Mignon, Noom Finance's CEO, more than $250,000 were lent over the last month. Latin America is a region that has far fewer credit facilities than countries with similar incomes, such as Eastern Europe or South Africa, he said. There's a great incentive for crypto products that bring new modalities to help expand credit in several ways. Noom Finance's credits can be 100% collateralized with Bitcoin, Ether, or DAI, among other crypto, while the interest rates varies according to the referential rates of each country. In Argentina, the rate of new Rs is 59%, while new Pens rates rises up to 6%. I think it's supposed to say 5.9%, maybe. 59% wouldn't make, I don't know. So why would your rate rise to 6% from 59%? Anyways, in August, Mexico's central bank announced a monthly rate hike for the 10th consecutive month, adding 75 basis points and taking interest rates to an all-time high of 8.5%. Brazil, one of the first countries to tighten its monetary policy in 2020, accounts for the highest second interest rate in the world with 13.75%. But the first place by far goes to Argentina, whose central bank announced in September a 550 BPS raise, hitting a 75% reference interest rate. Private banks are even more risk adverse with granting a loan. In Brazil, the largest private bank, Atua, offers personal loans with an annual interest rate that can go up to 172.85% according to its website. In Argentina, the annual interest rate offered by the largest private player, Banco Santander, can reach 230%. Jesus Christ. Sorry, I can't even bleep that out. These rates make it impossible for citizens to repay loans as inflation continues to rise, Darian Yane, an Argentine economist specializing in crypto, told CoinDesk. Latin America has some of the highest inflation in the world, with an average of approximately 11% year to year. These numbers have even affected the steadiest countries, such as Chile and Peru, whose citizens have recently started adopting crypto as a hedge against inflation. Furthermore, in Latin America, financial inclusion is still low. Up to 50% of its workforce works in informal conditions and therefore lacks a credit score necessary to apply for a loan. For some living outside the banking system whose income is in local currency, who can't access credit, can't access a bank account, a credit card, anything, that's when crypto becomes a solution, Yane added. So the age-old question that we always get asked here, and that I'm always debating, is crypto a hedge against inflation? And I think, as I see more of the news globally, my answer starts to become closer and closer to yes. Now, when does that apply to like the United States? That applies to the United States probably sooner than later as they continue to raise the interest rates, right? The federal interest rates. And once they get to a position where, it's like better to not even care about your credit score anymore, which I think would be beneficial to the individuals too, in my humble opinion. Once it's to the point to where it's like, I don't care about my credit score. I don't need a credit score anymore to get a loan on crypto. And the credit score portion to get a loan is going to be so astronomically more expensive that it doesn't even make sense. Then you start to break down the barrier for credit scores, which at that point I think is positive. And maybe we do see some sort of, frankly, like it doesn't matter which way we go, whether it's like CBDC or Bitcoin, we are seeing a financial revolution happen right now. Now, whether or not the individual is empowered or the state is empowered more after this revolution is going to be the question. And then from what I'm seeing here, when we see, crypto being utilized to give relief to individuals within different geographical locations, depending on what their current inflation rates and all that are, I see only positive news coming out of this. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.